in one or two sentences, just give a little introduction as to your experience with PPP projects, maybe starting with Heleen.
Our experience for PPP projects is mainly on the valuation side, because that is what our business does. It values all kinds of projects in Africa. And then we've been involved with some of the modelling and some of the original business plans as well.
Our experience on PPP projects at MIGA has been the provision of political risk insurance on energy projects throughout Africa, also on infrastructure projects in Africa.
Our experience in our infrastructure team is working with public and private developers in emerging markets and locally. And we work in all sectors.
Thank you. Thank you very much. So let's start maybe, Chief, from your experience. You know, we've been talking at the beginning of the conference about getting the setup right for the pipeline so that people aren't just doing project by project, but they're actually trying to build a really good framework and so on. Do you think many countries have got to that stage where they've got a very good framework, that everyone knows what their roles are, you know, not just from the legal point of view, obviously that's your experience, this is the legislative and regulatory framework there, but in terms of people understanding how to get these going, you know, we've heard a lot about this morning about the Indian experience, and it's a massive pipeline of 1,300 projects, and to get to the point when you can actually not have to have a massive parliamentary debate, huge demonstrations and so on every time you have a project, do you think those pieces are getting in place?
I absolutely do. As I was mentioning to you earlier, I've been coming to this very conference for quite a few years now, and I've seen the rhetoric change, and I've seen the understanding of the people that attend who are responsible for actually delivering these projects change. The thinking has evolved around unsolicited bids and whether they can actually be a tool for good. The thinking has evolved around stakeholder engagement, importantly, and also about the relationship between private and public sector and where you really get the benefits. So that is clearly evolving. As was said this morning, the Indian experience has been, it's not a 1 decade thing, it's a 3-decade thing, and we're arguably not even 10 years into this process yet. So the refinement and the finessing of the ideas is still taking place, but it does seem to me we're definitely on the road, and other pieces like finance and capacity building are also being brought into that equation as well.
Mm-hmm. And to what extent do you think most countries have now got a satisfactory regulatory framework in place, that they've done the sort of footwork in terms of getting that all there, and that the Parliament and everybody understands what's going on?
My understanding is that the people in PPP units and running ministries do understand where the blockages are, if there are any, in their regulatory frameworks, and work is being done to remove them. But there's obviously still issues in terms of ensuring that you get the right political support consistently in order to pass bills to change laws. So that is an issue.
Mm-hmm. And Heleen, you mentioned valuations, and it's interesting that you could value a power station or a oil refinery in the same way you might value an equity. But what's changed in terms of your experience in valuing PPP projects over the years? Have you seen the scene changing much? Just explain a little bit about some of the criteria when you're doing the valuation.
I mean, I don't think valuing projects has changed much, but what has changed dramatically, and I think it's difficult for people to adjust to, is the cost of equity that private players want. If you look at Africa, and we look at all the countries and the cost of equity in all the countries, if you GDP weight those and look at the increase in cost of equity in Africa from 2 years ago to now, in dollar terms, we're talking 2%. In local currency terms, we're talking 5 to 7%. And that's big numbers. And the problem is that the private sector, when they look at it, they have an expectation of that because that's their perception of risk. And it's quite important to understand, because I think it's always difficult for people in a country to say, but I don't think that's the risk to my country. But the problem is that cost of equity is not always about necessarily real risk, it's about perceived risk. And that's what we've got to bring down in terms of the private sector, is what they perceive as risk. in order to bring that cost of equity down and what they need in order to invest.
So just putting that in layman's terms, people are saying, I need more return out of this project because it's more risky.
Yes.
And how have they managed to argue that Africa's got more risky in the last 2 years?
I think there's two factors really. The one is it's around political risk, and I'm sure you guys have seen the Mo Ibrahim Index got published recently, which is a good governance index. And for the first time in 10 years, that index has not become better. And so there's been a very good trend over the last 10, 15 years, which is part of why people bought into the Africa Rising, and they believe that governance is on the increase and improvement is in Africa. So now there's a bit of doubt around that. Even not maybe that it will keep increasing, but at least that the tempo at which it is becoming better will slow down. And the second side of it is forex risk. That risk has always been there, but it has come home to roost in the last 2 years. And the problem is when a risk comes home to roost, people are reactionary. So they will look at it and go, well, if I had forex risk now and I made a loss, then I must immediately make an adjustment to not make a loss going forward, and then the cost of equity rises significantly. And yeah, that's really the two reasons, because those are the two main risks that people look at, and when they look at Africa, as political and forex. I think the situation in Africa is going to be changed dramatically, because commodity prices are not a thing that stays low forever. And Africa will, once again have the benefit of using that commodity rise to its advantage. So yes, there is definitely an argument around that, and the long-term trend is to Africa's advantage.
Mm-hmm. Chris, maybe from your perspective, you've been also got a bit of a long perspective. Do you see the sort of process of PPP projects? Do you see it sort of unstoppable stream? Is it something that's moving forward fast? I think the phrase came up earlier, from billions to trillions. Just explain a bit more what that means.
Sure, thank you. If I could just comment on what you're saying, it's very interesting, because in reality, part of the solution to get to the billions to trillions is local investment, not just foreign investment, it's local investment. Local investors, I believe, will have different required rates of return, have reduced perceptions of political risk, and you don't have foreign exchange risk. So in my view, one of the big factors to get to that level, that super level, the kinds of examples we're seeing in India that has deep capital markets, extremely world-class operators. The reason why, I think in part why they've been able to really develop such a huge PPP program has been the local financiers, local developers being able to develop projects. And I think that is part of the solution, in fact. Mm-hmm. I mean, in terms of what we are seeing at MIGA, we always have a very long pipeline of projects, energy projects in Africa. It's huge, it's really big. But of that pipeline, very few end up getting done, actually. And there's no doubt that PPPs are a solution. I don't know if they're a panacea or not, but there is no question, in order to get this growth, you've got the local markets, private sector has to play a role, it must play a role, and is absolutely critical to the success to really increase infrastructure development substantially, to get beyond just what we're seeing year after year, a few projects completed, FDI sort of up and down. To get to that next step, there has to be a huge investment, coordinated, and has to involve mobilization of the private sector in a massive way.
Mm-hmm. And what do you see is happening? What's the blockages that's stopping that?
I think the blockages have traditionally been, I mean, we've seen all the blockages. I mean, we've seen them during these presentations. There are a lot of blockages in terms of, project development, having sort of the capacity to develop projects. I mean, I think we sort of know what the blockages are. The question is, can they be fixed? And the AFDB program, like, for example, what was discussed on the New Deal for Energy, which is massively providing tools in terms of project development, feasibility studies, in a really big way, is what I hope, will be part of the solution. That's going to be, I mean, there is a recognition amongst development finance institutions, multilaterals, governments, in terms of what is needed, and there is a big attempt being made to address those. And the question is, let's hope that there will be results. So you're not seeing 10, 20 infrastructure projects in Africa, you're seeing 200 a year, you're seeing 500 a year. That's really where we need to get to at the end of the day.
Chinyelu, do you think we're being impatient? Because, you know, there's an argument that you've got to get the first 20, they've got to work. When everybody sees they're working, then you'll get to the 200 or the 500. You've been, as you say, you've been watching this conference since year 2, year 3. You know, do you think that's where we are, still at the first 20 and getting those projects to work?
I think that it is valid for there to be some frustration, because we should be further along, I think, in Africa than we are right now. And obviously there are exceptions there, but you know, there are experiences and there's great potential in certain countries that is still waiting to be unlocked. Of course, the concepts need to be proved, and those first few projects need to be achieved, reach financial completion, and the mistakes need to be made and then learned from. And once the concept is proved, then I think it will be a great unlocking, and people will see the benefits of them. And when I say people, I'm not even there talking about the public sector. I'm talking about the citizens will see the benefit. And I think once they see one country beginning to race ahead because it's managed to line up all of its ducks in a row, they're going to become quite insistent in relation to who rules them as to what can be delivered to them. And I think, you know, that will happen, that will be unlocked. And I'm very excited actually to hear about the New Deal for Africa in terms of power, because I think that with all of that focus, that is going to unlock a lot of projects in the countries that are open to them, and you're going to see that trickle effect.
Yeah, and I think it's very much a growth story. I was interested in the stories where they're saying the first road in South Africa, when the bankers came in and they said, where's the government guarantee on this project? And he said that everybody walked out except there was only DBSA was left in the room. You know, and then 2 years later, they're all banging on the door saying, hey, why don't you include us in your projects? You know, so you have to sort of see it. Your perspective.
Yeah, I mean, I think there's two things I'd like to comment there on. The first is what Chris said in terms of private capital. We publish a report called Bright Africa that looks at all the sort of investment and finance trends in Africa. And one of the things we look at is how much private capital there is and how quickly it is growing. And the thing about private capital is it's created by the middle class, because it's people saving for pension and it's people taking out insurance. That's what creates capital. And in some of the main markets, it's been growing 20% per year, year on year. So it's not that it's not being created in Africa. At the moment, it is very much being created. And then what I also wanted to say about that is that we do also some consulting work for the pension funds, and especially around this subject, because they, partially because from government there's a message that they want the pension funds to help develop. And as such, they want them to take an interest in infrastructure projects. And partially, quite simply, because it is very suitable for a pension fund, investment in infrastructure in terms of assets and liability matching. It is actually a good asset for a pension fund. But the pension funds are complaining that there's nothing for them to invest in. So they feel the pressure coming from this side from government, but they want to make sure that the risk and return profile makes sense for their members. So they are mostly looking at brownfields, and they're looking at those kind of projects, and they're struggling to find them. And on that subject, then I also wanted to say what Chinyelu said as in around the first 20 projects, is that when you look at the reprogram originally, and you work back from the tariffs, you know, you can see what the IRRs were on the first projects versus the IRRs on the projects now. In other words, what they expected then in terms of risk and now. And it's actually a 10% difference in Rand, which is spectacularly big, actually. And that is the result of taking out the uncertainty around the process. And that's really what it's been. Those first guys who went into it, they said, if I'm going to win this thing, I don't want to be in a position that all the uncertainties come home to roost and I lose a fortune. So if you can just get that first project through and an Egyptian gentleman spoke yesterday, and I missed his name, unfortunately, but he said exactly the same thing, that for their program, it was about getting the first successful one there and showing to people that there's a transparent process in which they can participate, which will bring down the cost of equity.
Coming back to what you said, you mentioned that you advise pension funds. I think probably RisCura is one of the most influential advisor of Africa's pension funds. And I'm always fascinated, because to me it's like sleeping giants that are waking up. You know, this idea that you've got a pool of money, it's maybe 25% of GDP, but it's growing at 20% a year in some, you know, and all over the continent you can see lots of countries where this money is growing, and you're wondering, what are they going to invest in? They can't put it all into T-bills, they're going to put it into other things. You know, just talk a bit more about the potential of these funds to actually scale up this whole process, because they need things to invest in and so on. But again, you know, with the AME Trade website, we try and keep these issues alive all the year. And earlier in the year, I wrote about this issue in Nigeria, where the politicians are saying the pension funds should invest in infrastructure, but the SEC has got some criteria as to what sort of structure an infrastructure project was. And the pension funds were saying, well, you know, fine, we love the idea, but none of the, you know, in terms of the directives, none of these projects that have come through have yet been formulated in that way.
Yeah, I think that's very much the message. You know, from the consulting guys' point of view, because they're like sort of another part of our company. So if you listen to their story, the excitement around infrastructure is that it could be an inflation-linked product. And in many countries, there is no inflation-linked products, and that actually forms normally the basis of a lot of your assets, because, you know, your pensions are also inflation-linked. So you want a bond which grows like your pension grows, you know. So they're very excited from that point of view. They have two issues. Liquidity is an issue, but most of the pension funds, let me put it differently. Liquidity is an issue for pension fund trustees. For asset advisors, it's not that much of an issue, because they understand that the liability profile is long. And quite honestly, by the time you've cashed in all your listed equity and you still need to cash things in, you know, the liquidity of the stuff's not going to, you know, that's a black swan event. So quite honestly, you should be fine on the liquidity of your listed equity. So they, in general, they are quite keen. The one thing that one's got to understand is when you go talk to a pension fund, the first thing they say to you, show me where it worked before. Because they are risk-averse investors. So I think that's quite important.
Do you think enough is being done to sort of make sure that the regulatory environment for pension funds allows them to invest into you know what I mean? Are the pension fund and insurance fund and social security fund regulators across Africa, are they awake to the need to harmonize some sort of system? And are the people creating projects, creating this sort of standardized pipeline of projects that they're structured in a way that pension funds could meet? Is there a sort of meeting from both sides that needs to be done in Africa?
I think that's partially, that's definitely an issue, because what a lot of the pension funds, because they want to look at a development mandate and they want to look at infrastructure, they find themselves looking at single projects, which is not their area of expertise. You know, a pension funds, as it's set up, there's no point in going to talk to them about an infrastructure project. They don't internally have the resource to really look at that pension fund. So they're either going to have to bring consultants in, or what they actually want is they want a diversified portfolio. In other words, so that they can spread their geographic risks, they can spread the vintage risk, they can spread the type of technology risk. That is actually what they are looking for and would be first prize. So I think, yes, if that was... And I think on the debt side, it's slightly different. Debt funds, I think, would also most probably be more attractive for that reason, the diversification. But it's still very attractive, as I said, because of the inflation-linked side.
And are you getting any traction in terms of advising pension funds to invest cross-border? You know, sometimes when you look at SADC or you look at East Africa, you wish the borders would just disappear, and people would stop saying, yeah, but your liability is here in Namibia, so you've got to only invest in Namibia, because clearly you're not going to have enough opportunities always.
Yeah.
Is that changing, that pension funds can start to look at a pool of Africa? Because there are some funds coming up from the private equity side and from the infrastructure side that are able to melt away the borders a bit.
I mean, I think from a regulatory side, yes, there is some relaxation. I actually think that what was quite nice from the South African point of view is that they suddenly allowed a much bigger complement under Regulation 28 to be invested outside of South Africa. And I take off my hat to the DBSA and the GEPF that they immediately then got onto that opportunity to start investing more money outside of South Africa. I mean, it is also partially because of the macroeconomic circumstances in South Africa, but they did take that step to move on. I mean, as for other markets, I think there's a lot of pressure to do so. You know, I can think of a couple of markets. I haven't looked at all of them in depth lately, but the couple that I have looked at, it's actually, there's some of them which want to go the opposite direction, you know, because they're looking for capital to remain in the country, which is unfortunate because, you know, you need those assets classes to be able to invest properly for a pension fund.
Do you share my frustration with borders?
I do, but I think being based in London, the way that I've been looking at it is very much about some of the more established pension funds and sovereign wealth funds. And they've got one eye on Africa and they're not quite sure what to make of what's going on. But I think it is absolutely necessary that internally or domestically or within the continent that money starts flowing as we've described. But we shouldn't also forget that there are other funds globally available that are looking for returns that they can't get in the traditional ways anymore. But they have very strict requirements, not just regulatory, but also in terms of the way that the projects have been structured. And you know, they want to make sure that environmental concerns, perhaps over and beyond those that are required by the regulatory framework that's in place in that country, have been observed. We've heard a little bit today about the UN principles that need to be that are going to be implemented, and those development goals. But I wonder how much thought is actually being given to that wider agenda when people are in the project preparation stage.
Mm-hmm. To what extent do you think that the projects are, you know, there's a pipeline of projects that's getting to investable stage, that you know, the projects are being well designed and they're meeting investors' standards? Is that process really picking up momentum?
And what is ultimately acceptable by the government and civil society. Mm-hmm. And I think that's quite difficult to achieve, mm-hmm. I think.
We're going to talk a little bit about community involvement, but let's involve some of the audience as well. If anybody's got questions they'd like to throw into the panel, please indicate. As I said, please introduce yourself. We have microphones moving around.
My name is Naol Mary. I'm from FCC Aquaria. It's a construction company, and we are sponsors for social in water PPPs. So, I'm now in Egypt, but I was in Mexico before, and there is something very interesting that says Heleen. In Mexico, they've developed a structure together with the National Development Bank and the National Infrastructure Fund, where the National Infrastructure Fund acts as a trustee in a platform or an intermediate structure, which is named, in English, it would be like development capital certificates, that allows the local pension funds to invest in infrastructure development. So they invest in local currency, and they have no issue with the forex because they are paid back inflation adjusted in local currency, and they've funded all their gap in social infrastructure, in water, to meet their goals in sanitation and what access of the population to water, to potable water, thanks to this structure that they developed in the early 2000s. And they did all their biggest wastewater treatment plant and big water aqueduct through this structure with also the National Infrastructure Fund puts some additional grants from between, I mean, there are rules between 0 and 40% for water projects, and it also leverages the returns of both the sponsor, private sponsor, and the pension funds that want to participate. So it's really with the structure of trust to secure cash flows, give enough security to the pension funds and the private sponsors, and also make sure that the public entity, which are usually the state water entities, also are ensured that the private sponsors meet the requirements for water quality, water quantity, and and also the banks that are involved to fund, to put the debt side, are secured through an independent technical expert, independent financial expert to the trustee, okay, to make sure that the deadlines are met, etc., etc. It's very interesting, and Peru also has a lot of national pension funds, and they are right now trying also to involve them in the development of the national infrastructure in local currency. So like this, you solve the problems of the foreign exchange, which is very, very complicated for water, because water, you don't get the returns of energy, for example. So this structure, for example, maybe is transmissible or is workable locally with the local context, but in Africa in some cases, no?
So it's a question that the pension funds aren't so demanding in terms of return. They understand what return they need, and it's maybe not so stretchable.
I mean, I think what is interesting about that example is Mexico and Chile have a very similar pension system, which is actually the one that Nigeria has adopted with a few tweaks. And what that has allowed is that there's a limited number of pension funds and pension fund administrators. Now, whether you agree with that or don't agree with that, you know, I'm not enough of an expert to say one way or another. But what that does allow is, from a regulatory point of view, it's reasonably easy to control. And it makes it a good grounds for what you're talking about, you know, is if you can go and sit down, you only need to go and sit down. I think in Nigeria it's 9 PFAs. You can put them around the table with the government, and they can talk and say, listen, if the government's willing to give those guarantees, then if you pool funds, then we will definitely invest, you know. And it allows that kind of system. You know, a place like South Africa, where we have thousands and thousands and thousands of pension funds, it makes it a bit more difficult. But I think that Chilean and the Mexican model, which a lot of other countries in Africa is also considering, you know, is definitely, you know, helps to do that. And I think it's most probably a great idea, yeah.
Thank you. Risk and reward debate, why PPPs need to continue to grow. I think one of the things we can do is what we are doing today, what we have started on Monday actually, by organizing this kind of forum to share experiences and lessons learned, and to dispel rumors and misconceptions. Like in the case of Lekki project, there's tendency for an uninformed mind to say Lekki project is not a good project, just because that along the line some things did not go well, and then the project reverted back to the public sector. But if anyone knows the history of Nigeria properly, particularly the history of that axis, it used to be like a jungle. Today, it's one of the most vibrant business corridors in the country, thanks to Lekki Toll Road project. Today now we're talking of Dangote refinery coming to that business corridor, talking about airport processing zone, Lekki Deep Sea Port, high-profile housing project, modern real estate project, and people bought a piece of land for peanuts about 10 years ago. They're now millionaires. So these are the positive stories, and when you look at why did we not achieve the real result of PPPs for 30 years, we need to share the lessons learned, the experiences, and in future that can do things differently. For instance, if I were a private sector person on the PPP space dealing with government, I will make sure that some of the contributions of the government is front-loaded at the period of excitement. The period of excitement is the starting point, when the government is very excited, jumping back and forth, want to do stuff. But after some time, the excitement wanes, the contribution is not forthcoming in a timely manner, there are excuses, there are political considerations. Right now we have two toll booths well constructed beautifully. Only one is tolled. The second one is shadow tolling, which means that the government is paying for it, not the users. That's one of the reasons why it becomes unviable. So these are the issues that can be tidied up front, and the other issue is the issue of not having alternative road ab initio, etc. If we can continue to organize this kind of forum from time to time, really thank AIM-Trade for bringing this kind of forum in place, I believe PPP will continue to grow.
So it's a question of really spreading the message about the benefits, how people benefit.
Exactly, yeah.
I heard a nice story at the end of the last panel about doing a project with a rural community in a country, and they promised lots of benefits, and then the opposition came along and said, no, you must riot, because if they bring all these benefits, they're going to take your land. And so the people said, okay, we'll shoot you if you come. And then eventually they got the project done, and they didn't take the land. And then the people said, okay, we'll go and shoot that agitator that was coming to cause trouble. So I think once people see how the thing works, that trust element builds up. You wanted to say something?
I completely agree with that sentiment. We at MIGA, we worked on the Pont Conan-Bidier in Abidjan, as did AFTB. And we're covering all the private sector components there, equity and mezzanine debt and senior debt. And it was a very difficult deal to do. It was because you're picking up, after 10, 13 years of civil war, you're picking up sort of it's difficult to structure. But they built it. And you go to Abidjan and you see this project, it's amazing. It's really amazing. It's stunning, actually. And the thing is that structurally, perhaps not optimal. Could have spent some more time, tweaking, more traffic studies, this, that, and the other. But the reality is they built it. And infrastructure projects are long-term investments. And there may be teething issues and sort of what have you. There could be big issues. But that project will still be there in 15 years' time, and people will love it. And it's the same with the expressway. It will still be there. And the benefits that accrue to these projects, this is my personal view, far exceed anything you can put into a model somehow. I just sort of feel that these projects are really important. And certainly the government of Côte d'Ivoire they've promoted this project as a successful PPP project in Africa, and that is a model, and we're proud of it, and I think the government is proud of it. And it shows that PPPs can be done in Africa, and having these demonstration projects are important, because I agree with, people see, neighboring countries see what can be done in these, and they also want to implement these. So that I agree with you. It is a strong story that there are successful PPPs that one can look at, even if in the early stage there are teething problems.
So you're saying it's more important that the bridge gets built than that it's perfect?
Yeah, I do actually.
If it exists,
yes, I do.
You want to?
Perfect insofar as it works. Yeah. The financing, you can sort that out. That can be tweaked.
Well, we're talking what the social value is.
Absolutely, no, I agree.
And the demonstration effect to other governments, that it can be done and it can be achieved. And we're not going to necessarily, on the first, we've heard time and time again in India and other countries, in the UK, wherever you go, the first PPPs are not always the most successful, but you work on it over time, you tweak on it, and in the end, the required returns are reduced and risk is reduced. But there needs to be political courage to do these projects.
If I could just add, to support that from a legal perspective, there is, as much as we'd like to think so as lawyers, there is no counsel of perfection in this, but you're pushing towards that, and all of the parties should be. But to just bring in a little bit of experience from the UK, which has got a long PPP or PFI history, we are in the second phase of standardized documentation. And before that documentation was produced, there was a study done. And the study was basically initiated because there was this sentiment that actually not enough risk was being given to the private sector. By the time they finished that report, they actually found the opposite, that the public sector could actually retain more risk, and it could do so without detriment to increase efficiency and lower cost. And that was not intuitive at the time. So I think the point that I'd like to add there is that it's very easy to overstate the risk. We all spend a lot of time analyzing risk, ensuring risk, but you can't overstate the benefits, as you've just said. It's more than just the bridge or the road or the hospital. There are a lot of unintended benefits and consequences that result, and we don't spend a lot of time analyzing those. And for me, the big example of that was the example at the beginning of the Africa Rising narrative, which was the telecoms experience. A big risk was taken, theoretically, by MTN going into Nigeria. But it was an incredible story. And it's not just about the fact that everyone has mobile phones now, but it's also looking at what that technology is doing to leapfrog opportunities and being used in other sectors, industries, etc. So each PPP has that potential, I think. And in terms of a risk versus rewards analysis, I think if you get it done, there's always going to be more rewards than risks.
You'd like to add as well?
Yeah, I just want to add a good news story, basically. We have been valuing for a long time a refinery project in Egypt where, and excuse my lack of technical understanding, but where the gas that comes off the original refining process is then further refined in order to give further petroleum products off. And I find it amazing that they started before the first revolution. It went straight through both revolutions. It is materially on time, materially in budget. They had to build a bridge across the Nile to get some of the components in. And despite all of that, they will soon be producing petrol, which they then no longer have to purchase, outside the country.
So if you think how big the sort of religious and political swings have been in Egypt, and the merits of a gas improvement plant is still survives all of that. That's quite encouraging, good news story, yes. I think, my own experience as well, when I first started working in investment bank, and so Happy Investment Bankers is quite an awesome site, but they'd got a railway concession where they'd sort of figured it all out to get their return, and then they suddenly realized now the railway's got lots of people using it, the real estate was now massive value add, which they hadn't even thought about. And you've got a comment at the front, and two comments at the front. Let's start here and then come to Paritosh.
Thank you, Mr. Moderator. My name is Shehu, Federal Minister of Transportation, Nigeria. Mm-hmm. You see, the risk of this PPP is that the investor, when they come very big and high, they try to control the political arena of the country. In fact, at times the sovereignty might be very, very, might be at risk. For example, when a PPP man or a very large investor comes and he takes over, for example, refinery, just like the good example she just gave now, and the refinery can decide, okay, fine, I want to produce a liter of petrol or diesel at so amount, and the government finds it that it's quite outreach because of the social economy activities that it will affect. So with that, you can see there's ample big risk when PPP, or rather an investor come in with a PPP idea and it's not being regulated and he's not being controlled. At the same time, there are some countries who came here, for example, Mali came, he said, look, or Nigeria came, that if you come invest in Nigeria, you can take the whole capital outflow as you make money and then everything. That tends to affect the economy and the social economic activities surrounding that. So that's just the only main risk that I felt this conference has not properly addressed. Well, we've been talking, PPP is the right thing to do, good thing to do, that. But when you now look at this particular risk, it becomes very imperative. And that's the reason why a lot of countries, from one country to the other, they try to say, no, you can't tell us what to do. And then you do this. You find out a PPP project going for like 3-4 years before closure, or you find this thing going forth and front and then everything.
I think
Thank you.
That's a very valid point, and I think we've talked about it sometimes in this conference. We call it sort of, maybe we've termed it sometimes home team skills, that, to what extent government, and I think South Africa has been a good example to say, this is how it works here, it's clear, this is what the rules are, and a lot of skills on the side of the government to say this is what we need, this is what we want, so that the other guys know whether they want to fit in or not. It's not a matter for, there's a certain amount of debate to make sure it's suitable for foreign investors, but there's a balance. We mentioned yesterday, I think, that it's not a public-private love affair, it's a public-private partnership, so that, both partners must be pretty strong. Yeah, Paritosh, you had a point.
I guess some of the points they're raising from our own experience in India. I think if you divide the PPP projects, or if you divide the infrastructure projects, 40% falls in the energy sector and 40% falls in the transport sector. Energy sector and transport sector, none of the projects anywhere in the world can be viable in the first 5 years, right? So they would require sovereign support. That support can come in by way of a long-term guarantee. It can come in by a commitment to pay, subject to they don't meet their benchmarks. We should never forget that when a government constructs a project, goes overboard, government can always print money. They can do deficit financing. A private investor cannot create money. He has to earn rewards, he has to get his... And what has a challenge which Africa has been facing over the last 5 years is dramatically falling commodity prices. So when investors used to go to Africa in the past, let's say sub 2008 and sub 2009, they knew that irrespective of what the governance of that country is, intrinsically and fundamentally because of their resources, the country has money, right? Today they are not sure. They're not sure when oil will cross 100 again. They're not sure when coal would cross $40 or $60. So that makes people edgy, because that 40% of the viability gap which should come in the first 5 years. And having said that, all these projects after 5 years will give you enough returns in the next 15 years to pay back whatever sovereign distress was taken care. Now, that is a very important point, and I think that requires maturity of markets. Because when you talk about a housing project, when you talk about domestic demand projects, and I think I'll address that question about MTN also. Because in India, I think the only sector which was never regulated was the telecom sector. Today, hundreds and hundreds of billions of dollars have been invested in Indian telecom sector. It has unleashed the amount of SME entrepreneurship and the amount of IT business in India, which is incredible. The return for a telecom operator, everybody, even my servant today, has a smartphone. He uses internet for everything. And that is data. He's paying for it, right? So the projects which retail investors can repay is not at risk. So telecom networks anywhere in the world will never be at risk, because the kind of leaps and bounds they are making and the kind of jobs they can create because of access to hinterland. But when I'm again coming back to the fact that 80% of the projects will be in energy, and this, I think multilateral institutions, international institutions will have to support governments, because sometime the cycle will take change. It could be 5 years, it could be 10 years. I think that is the distress period. And that is when I think Africa will, because developing a good project, getting regulations in, all that is addressing effects. It's not addressing causes. Cause is that if a project costs $1 billion, it has to be provided $1 billion, wherever it may come from. Governments may do it, they do deficit financing, they cut other budgets and supply to that project. They can do it. A private entrepreneur can never do it. And I think to that extent, the private entrepreneur should be given the respect. because he is only lead managing somebody, or he's a trustee of somebody else's assets and money. He has to give those returns, otherwise he will go bankrupt. Governments don't go bankrupt. I think that is this limited point I wanted to make.
Thank you very much. I can see you guys don't really want this conference to end, but the clock is against us, and it's one of those things that however much we'd like to stop the clock. So let me let you guys have. You want to answer quickly those points?
Just really quickly. I'm sorry. On the sovereign guarantee question, I mean, this is a huge challenge in Africa. I mean, particularly with low commodity prices. A lot of African countries are on IMF programs. The ability to issue sovereign guarantees is limited by the IMF program. And these are considered guarantees on PPPs or termination requirements and payments and sort of what have you, are contingent liabilities for the IMF. So there's a constraint in what governments can actually do in terms of developing these PPPs. So, but this increases the importance of DFI on the public financing side. I just wanted to.
So let me ask our panel two last questions. The first one is, do PPPs need to grow, or are there places where they shouldn't be? I think you mentioned that government should sometimes pay projects. There's a lot of things that government can do better for itself. So that's the one question. What are the limits? And secondly, what's your takeaway from this conference? Do you think next year is going to be a very booming year for PPPs? Maybe we'll start with Heleen.
Sure. I think that for me the important bit is, and somebody did put up that slide yesterday, is there is a range within the PPP structure. And I think that there is a certain portion which is very viable for the private sector, and they may even be able to raise their debt on their own. So what we need to try and figure out is what can the private sector immediately do for you with enabling legislation and regulation, where it is already an economically viable case. So, I mean, my thoughts on it is we need to start at that side of the spectrum and work towards where there is, for instance, massive government guarantees required.
Mm-hmm. Chris?
Yes, of course PPPs need to grow with the help of the private sector. Each country has its unique characteristics. It's true that best practice can be imported, but each country ultimately will have its own requirements, its own needs, its own perceptions of what is possible and what is not possible out of a PPP program. Mm-hmm. But PPPs will continue to be important, and we will see if the kinds of initiatives that are underway by the multilateral communities and others are going to have the real effect that everyone would want to see.
Mm-hmm. So you're waiting to see. The proof is in the pudding, basically.
It is, indeed.
Yeah. And T?
I think I'd agree with Helen that PPPs, they should grow, but you've got to use the appropriate PPP structure for the right sort of project, and it's not one size fits all. They're very specific things, and there are things that private investors will do in Africa without the involvement of government's contributions at all, save for the infrastructure being put in place. And in terms of a theme that's come up for me during the conference, it's really been about the fact that rewards are perceived as well as received. And I don't think people are necessarily thinking about, or I think we need to think about more about how we sell the benefits of PPPs and how people are actually being enfranchised through PPPs. And then they themselves will push for more PPPs, I think.
So we need to make sure everyone perceives the rewards of PPPs in more detail. So you've got a message to take out of this conference, the PPPs are good for you. So yeah, I think that's been great. We've had a very fascinating panel. They've done very well in terms of both recapping all the themes of the conference. So they've obviously been listening hard for the last 2 days, and also sort of giving us some hope for the future, but also quite a good agenda for action. Chris wants us to go from billions to trillions very fast. Heleen is saying, we definitely need to get the numbers right. We need to understand how to get the structures right, and then it will boil down to those few percentages of valuation that will make these projects fly or not fly. Chinyelu is saying, and we need to make sure we're getting the perceptions right, that people actually perceive what we're doing. So can we have a round of applause for this amazing panel? Thank you very much. Now it just remains for me to close the conference. You can go, guys, and sit down. Thank you very much indeed. We've been very lucky in terms of the people we've had in the room. We've had very good, strong support from DBSA, from AFDB, African Development Bank, and Development Bank of Southern Africa. They've fed us, they've entertained us, they've looked after us, they've hosted us. Thank you very much. Toll Infrastructure Services has been a major sponsor of this conference. We've had exhibitors. I hope you guys took a chance to go and check out the exhibitors, particularly the APMG International, which is very much involved in the continuous professional development on PPPs, and the other exhibitors in terms of information services, partnership bulletin. So this conference has really been driven for, and of course Brussels Airlines. I missed the seat. A couple of years ago they had a beautiful airline seat, so you could actually test out how comfortable Brussels Airlines seats were. But you know, definitely this conference wouldn't be where it is, wouldn't be possible even to get you all together without these sponsors. So DBSA, AFDB, Toll Infrastructure Services, APMG, official carrier. And also we need to sort of give a nice word of thanks to Africa PPP Advisory. It's been very interesting building the interaction with them, because a lot of the sessions that people said were very valuable, particularly the project focus, the one-on-one meetings, so that we could leverage the fact that so many of you have come from all over Africa, all over the world, into one place. And you know, just to put you in one place and then make you sit and listen to talks doesn't mean we're getting the value out of the maximum value of putting you together. So we've been able to celebrate together a bit last night, but I think yesterday the round tables, the project pitches, so really so people can come to one hotel in Portman Square, but get a view into all the different African countries that are present. I think that's really achieved a lot. So so thank you very much. And of course, very, very beautiful moderating from Gori, from the Africa PPP. The AME trade team I'd really like to thank, because they've done an amazing job in terms of working efficiently on this project, keeping everybody cheerful. And the last 3 days, we've had the opportunity to hear from a lot of expert panels of speakers. During the conference, we've heard several times that there needs to be increased sense of trust between the private and the public sectors. Governments shouldn't be wary of being seen to engage with. We heard earlier on that you shouldn't be seen by journalists schmoozing with private people and drinking cocktails before they get their contracts. Governments shouldn't be wary of being seen to be engaging with private enterprises, and we should do so as early and as thoroughly as possible to make sure that projects are bankable, but at the same time balancing that out. Many of the panelists also talked about the importance of true public participation, the fourth P of PPPs, and really, or PPCs, as one person with community as the C, and really engaging with civil society and the local community if this project's going to have a continued support and buy-in. We've talked a bit about, and maybe not enough about, the need for harmonizing frameworks and regulations. It's been continually been stressed, and this means partnership through dialogue with each other across borders, learning from each other. This idea of copy passionately, it's actually, if you want to put it politely, you call it harmonization, and that's a very good way to, we all harmonize from the best practice, and you know, we all get good practice that way, and it's a very good approach to it, and I've applied it very well in capital markets in the past. It's definitely a way forward, because it makes life easier for everybody, and it makes life easier for anybody crossing. You don't have to relearn everything, because you've got a system that works and people are using it. This means partnership with dialogue with each other across borders, as well as with multilateral development institutions. So trying to get these guys to share the best practice, find out where they've written it down, even if it's 100,000 pages, and wade through it. This year, the addition of the one-on-one business matchmaking meetings with the PPP units proved to be a great success. We hope to explore this concept and any other concepts further for the 2017 edition. One of the themes that came out in this last panel was the domestic pension funds. That's going to be an area to develop. We're also doing a conference in March for the pension funds, and we're hoping that there'll be a lot of PPP involvement, a lot of infrastructure development. You've seen that sometimes in the AME trade publicity. It's going to be almost the other side of the coin, as it were, in terms of the way we see this developing. So I think you could sum up the key theme that's emerged with the word partnership, which is, of course, the final P, as in participation of the PPP. Overall, our panelists seem to be telling us that we need to increase, reassess our level of partnership across the board, and perhaps translate it into a deeper sense of trust, cooperation, and collaboration. So with a view to continuing to grow this program, to continuing to work with our partners and continuing to build the capacity, continuing to get the billions to the trillions, to get the sort of pipeline really moving, we're really looking forward to hosting you at the 9th edition of Africa PPP in November. We've already put up the dates. And in the meantime, all it remains to me is to thank you all, because you've been a brilliant audience, you've worked hard, you've asked a lot of questions, and our panelists have been excellent. So thank you very much. You've made a wonderful conference. Thank you.